What's going on, people? It's GBP, baby. It's currently 6:24 p.m. Wednesday, the 31st of May. We're starting a new month tomorrow, and so I've decided to start with the monthly just to show you what I've done with the monthly in order to frame my next month's expectations. And so this is the monthly chart. As you can see, we have a bullish order block here, and what I've done is I've marked out the 50% of that. That's going to be this thick red line, and then I've also marked out the 25% level of it. 50% of a bullish order block is what you call mean threshold. So this is the lowest price should trade to if we are to remain bullish. It shouldn't go any further than that. And then I also marked out the 25% monthly because just as much as fair value gaps are ranges, I look at order blocks and wicks as ranges as well. So, and in one of ICT's videos, he states how the fair value gap can be split into quarters. So the upper quarter, and then the middle quarters, and then the low quarter. So that's why I usually have the 25%, 50%, and 75%. But since I'm not expecting price to go below the 50%, I've just got the 25%. So if we drop down to the weekly, we can see that fair value gap, which I've had marked out for a while now. I want to see price draw into this area. And then, yeah, nothing's really changed there. And then on the daily, we have the sell side liquidity and also this bullish order block here. Again, this is all stuff I've been stating for a while. I marked out the 50% level of this bullish order block, which happens to be within the weekly inverted gap, which also happens to be at the 25% monthly order block. So this is all again adding reason and confluence as to why I want to see price start to draw down into this area. Obviously, we have the 50% monthly order block resting here, but this is definitely my target. So if we drop down to the 4 hour, we can see that we've had a very consolidated day again in terms of back and forth movement. I'll stay on the 1 hour. So this is our current trading day, Wednesday. And after this expansion yesterday, you can see we've started to fall, start to work our way down into this bullish order block. We've literally just traded into it. Let me just make it bigger. As you can see here, we traded into this. And you can see we found support and it started to move higher since. But although we moved so aggressively although we moved aggressively high and started to trade down, I did take a better look at dollar and euro, and when we compare them, you'll start to notice quite a significant divergence going on. So I'm going to go to the 4 hour and I'm going to add Dixie and I'm going to add Euro USD. And what you'll see is that not as per usual, but I've seen this before, but Euro is moving lower here. We can see dollars moving higher. So them two are in tandem, as in Euro's doing as dollars doing. However, pound is not moving lower, and pound should be making lower lows. Here, you can see pounds clearly moved higher. So when you see things like this, it's fair to expect that GBP is going to have to catch up with Dixie and Euro. Because Dixie and Euro are moving in tandem together, I'm just waiting for GBP to simply catch up and trade lower. That again giving me reason as to why I still want to see this weekly inverted fair value gap get traded to, and I want to see it happen aggressively. So yeah, that's pretty much what I wanted to state in today's video. I just wanted to point out the fact that there's clearly some kind of divergence going on. Dollar and euro are in tandem, again holding hands, doing the right thing, whereas pound's doing their own thing and needs to simply catch up. And in order to do that, it's going to have to trade aggressively lower. So I wouldn't be surprised if tomorrow or if the non-farm payroll helps push that kind of activity. But we'll go back to pound for one last thing. I just wanted to point out how once we traded higher here and then lower and then back again. I did state yesterday how I wanted to see this low get traded through aggressively. So if you watched yesterday's video, you can go check that out. It's only I think it's only about 9 minutes long. But I had this low in mind, and you can see how we did aggressively trade through it. So now that we've had that, again, this is all add-in reason as to why I'm happy to see us continue lower. We can also look at this fair value gap on the hourly, and if price remains below this, as you can see, although we've wicked through it, you can see a lot of volume staying below it. So long as volume stays below this fair value gap, again, that's going to add reason, and it's going to help reason why I want to see price continue to run into this sell side liquidity and eventually into this fair value gap. So not much to say. Again, another consolidated day. I think this is absolutely ugly price action. I hate it. Disgusting. Like, I'm not really a fan of it, but nothing we can do about it. We'll see what Thursday and Friday gives us. I wouldn't be surprised if it was just a straight run down into the lows. But after seeing the way that Dixie's clearly moving higher and Euro's clearly moving lower, and GBP is just doing our own thing, then it seems to me like GBP is going to have to catch up, otherwise some craziness is going to go on. But yeah, that's been all from me. I've kept this one short and sweet. Keep an eye out on Friday. I've got another backtesting video dropping. But yeah, this has been GBP, baby, and I'll catch you in the next one. Peace.